Gordon, I just want to just put a fine point on something, Gordon. You're suggesting that next year for Tesla, that they're going to have supply problems? That's the problem? Meaning there's going to be so much demand for this car and their problem is going to be supply?
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. Today, I'm reacting to some recent comments after Tesla's battery invest today from my favorite Tesla bear, Gordon Genius Johnson, whose credibility, track record, and intellect are unmatched in the stock analyst world. In fact, let's bring up Gordon Johnson's profile on the website tipranks.com, which collates recommendations from stock analysts the world over and then ranks them based on the performance of those stocks they've recommended either buying, holding, or selling over time. As we can see, Gordon Johnson is among the top... it appears he's in the bottom 15%. Well, that's awkward, isn't it? Well, with that out of the way, we've established this man's credibility regarding his stock recommendations in the past. Let's get into the video. But first, hey guys, if you're in the US and you'd like to help out the channel and get a free stock, check out the link in the description to WeBull. If you open a new account and fund it with $100, you'll get a free stock valued up to $1,600. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it. And before we dive in, I just want to be super clear. I'm never attacking the person, but the ideas. So if it ever appears that there's anything personal going on here, believe me, there isn't. It's just the person is the medium through which I am attacking the ideas. Let's continue.
Some things that happen, obviously, have pushed that stock into the stratosphere, much to your consternation. Now, I'm sure, Gordon. I mean, you did increase deliveries 50% last year, forecasting a 30 to 40% growth for 2020, despite the pandemic. You know, profitability, I know that there's a lot that goes into what we call profitability for Tesla, but that excited a lot of people, and obviously the stock has performed better than just about any other stock. So do you think there's a day of reckoning coming?
Right, but Joe, you got to be careful with just looking at stock price, right? If you look at their guidance, previously they said they were going to do over 500,000 cars. Last night, if you look at the midpoint, it was 495. So they actually cut their guidance last night.
Okay, take notes. The Gordon Johnson playbook. Step 1. Cherry pick some piece of information, and I use the term loosely. Interpret it in such a way. Tell people what it means. Add meaning. Create meaning where there is none. Infer or directly state something that just does not align with reality and pass that off as if it was a fact. People who don't understand enough about what's been said and have context may take that as an accurate, reasonable, truthful point when it is in fact not. So Tesla didn't reduce their guidance at Battery Invest today. Elon Musk mentioned that they were expecting to grow by a certain percentage range this year, and Gordon Johnson has taken this and then looked at the halfway mark between these percentages and then decided that that applies specifically to delivery numbers, and therefore the midpoint between these is exactly this number, and therefore Tesla has reduced their guidance. This is not a statement of truth. This is a dishonest way of somebody manipulating something that was said, implying that it's truthful when in fact it's total BS. And I suspect this is the kind of strategy you're going to see Gordon Johnson continue to use throughout this interview. This isn't the first time I've seen this. Very intelligent, ethical, honest, reasonable, and rational stock analysts discuss Tesla, and I've noticed some patterns. Now let's do a quick little fact check in terms of the numbers. Tesla in their Q4 2019 financial results reported full year deliveries, which were exactly 367,656 vehicles. Now, Gordon was talking about this percentage range that Elon talked about and somehow inferring that Tesla's reduced guidance. He talked about 30 to 40% growth for the year. If we assume that applies directly to deliveries, not revenue, etc., but say to deliveries, the halfway point between those two marks is 35% growth, which works out exactly to 496,335.6 deliveries. That is 99.26712% of 500,000. And there was a fucking pandemic after this guidance was initially released. And they're still, even if you do take that halfway point, pretty much 100% on track to meet 500,000 vehicles delivered this year despite forced factory shutdowns.
And with respect to stock price, look, you saw Nikola, right? They had a truck rolling down a hill that didn't have an engine. How is that different from what Tesla did years ago when they showed solar panels that didn't work on a house that was on the set of Desperate Housewives to sell the $2 billion acquisition of Solar City.
Another tactic from the Gordon Johnson playbook here, bring up something totally unrelated that carries with it some connotations and innuendos. Allegedly, Nicola's a bit of a fraud. Okay, I'll bring this up and just smear something at Tesla. I've got no idea what he's talking about. Anyway, let's continue.
Listen, Tesla's revenues, as you know, peaked essentially in the fourth quarter of 18.
Tactic number 3. Use the word essentially as a get-out-of-jail card when you try to mislead and lie to people by stating something as if it's a fact when it's not, such as the claim that Tesla's revenue essentially peaked in XYZ quarter when they've subsequently had a quarter with higher revenue. Now, this is just my opinion, but it seems to me like Gordon Johnson appears to be intentionally attempting to mislead and deceive people with the way that he's presenting his so-called facts. What do you guys think? Let me know in the comments. Is Gordon coming at Tesla from a place of honesty and integrity, or is he attempting intentionally to deceive people? Let me know your thoughts below.
Their margins peaked in the third quarter of 18. And while people compare Tesla to Amazon, it's not Amazon. Tesla's more like AOL or BlackBerry. There's 46 new EVs hitting the market next year, 8 of which are coming from VW.
Psst, have you guys heard? The competition's coming. Good one, Gordon. That's your strongest point so far. Well done. Yeah, the competition's coming. Can't wait to see it arrive. It's been coming for a long time. I tell you what, it's going to be a mess to clean up when that's... Oh, wait, I didn't say that. Let's carry on.
And if you look at what VW said with respect to 300 gigawatt hours per year of battery capacity, that works out to about 4 million EVs they're planning to push out over the next 2 to 3 years. So I think that what Musk did last night essentially was push out the production of his batteries. And I think the issue is all the big boys, Ford, GM, VW, they've essentially brought out battery capacity. There is no capacity left. So Tesla effectively has to do it on its own.
This is a truly absurd attempt at twisting the facts around. Okay, cool. That's an interesting way to interpret Tesla deciding to develop their own battery cells so they can scale faster and bring their costs down and continue to vertical integrate as much as they can, which they've been doing from day one. Yes, totally. Yeah, that your logic checks out, Gordon. Well done, mate. How's that tip ranks profile going again?
But if you look at their R&D as a percent of revenue, it's dropped from roughly 16% in 2016 to 4% today. So they're not even investing.
Holy crap, I have to pause this video every 3 seconds because there's another lie or some attempt at deception. This is insane. Okay, Gordon, let me explain to you. I'm not even going to try and pull apart your ridiculous logic. There's no, like, if people go and look back at the scale of Tesla, their revenue, we don't even need to go there. Has it occurred to you, Gordon? And I'm sure it has. My personal opinion, I think Gordon's just saying the things he says, not because he believes them to be true, but because it serves his particular needs, potentially being short Tesla stock. Possibly, I could be hallucinating that. I'm just thinking out loud right now. Is it possible that Tesla has become more efficient with their R&D expenditure, given the fact that they've researched and developed a bunch of core technology that they're now manufacturing at scale? Is it possible that they don't have the same need to invest so heavily in R&D as a percentage of revenue, also because now their revenue is fucking enormous because all the research and development turned into products which are now selling very profitably and making them a lot of money? Is that possible?
So when you look at his missed promises and you look at the fact they're not investing, I think you have to be very skeptical with respect to his projections. And I think next year they go back into losses as that credit revenue falls.
Now, I could be imagining this, but I seem to have the impression that when I've seen Gordon Johnson talking in the past about Tesla stock, their market capitalization and the future of the company, it seems that often he's expecting something terrible, horrendous to come out of nowhere in 6 months, 12 months times, in a few quarters, just far enough off into the distance that most people will probably forget this statement was even made. Let's pay attention. Let's see in 6 months' time if Tesla's now making quarterly losses.
So in terms of the forecast for batteries, you don't believe what Elon says he's going to be able to do in terms of what the battery will be capable of, or the number that they're going to be able to either buy from existing suppliers, or they want to do it on their own. They got some pretty aggressive plans, but it has been pushed out a little bit. You think those are all? You don't think those are realistic projections that Mr. Musk is making? You don't expect those to come true either?
Well, listen, it's not about what I expect. There's math you can do, right? They said 65 gigawatt hours per year. That's what they're looking to get to.
Is Gordon high or am I? Where'd that 65 gigawatt hours number come from? The 2022 goal was 100 gigawatt hours, and the 2030 goal was 3 terawatt hours, 3 1,000 gigawatt hours. Am I high, or where'd that number come from, guys? Let me know in the comments. Did I miss something somehow in the presentation, or is this number not their goal?
That would require roughly an $8 billion investment on top of the Cybertruck, on top of the Gigafactory in Texas, on top of the factory in Germany. So they need to raise billions of more dollars to get to these goals, and they need to invest significantly in R&D, which they're not doing.
Should we tell Gordon that Tesla's got like well over $10 billion of cash? Should we tell him that, or the fact that they're producing profits every quarter and that they're accumulating cash now, and they've done that 4 quarters in a row, and that's likely to continue as economies of scale come into play further, as they drive costs down further with investments in tech like the Gigapress, etc. Should we tell Gordon, or just between us?
Listen, the problem for Tesla is there's massive competition coming next year. You know, this reminds me of the movie Ford versus Ferrari. You remember Ford got really upset with Ferrari at the Le Mans race because they said, we're the best auto manufacturer in the world. Every auto company in the world is coming for Tesla's neck. 46 new EVs coming in 2021.
Gordon, the move in the stock gives them, I mean, in terms of raising capital, they're in a much better position to do this than their competitors, given what the stock has done.
Joe certainly has a point, and Tesla literally did exactly this. They raised another $5 billion very recently by diluting shareholders just over 1%. If they need money, it is not a problem.
Right, but you also have to consider, right, they need to start showing growth. They're valued at a multiple of VW, despite the fact they're targeting 495,000 cars sold this year. VW sold 11 million cars. So they have to show significant growth. And we think that, given what he said last night, we think their deliveries are actually going to be down in 2021 because they just don't have the battery capacity to hit what they need to hit, and everybody else is sucking up all the capacity in the industry.
You cannot possibly be serious. Gordon Johnson just said he expects Tesla deliveries to be down in 2021. Someone remind me in a year and a half to clip that and remind Gordon how accurate his prediction was.
So I think when people see that, I think people are going to be far less willing to give Tesla infinite amounts of money.
I wonder, you'll disappoint me if I ask you about that Tesla Plaid 0 to 60 in less than 2 seconds. If you tell me that's not going to work, then you've popped my bubble all around. Andrew, you got a question for Gordon?
Gordon, I just want to put a fine point on something, Gordon. You're suggesting that next year for Tesla, that they're going to have supply problems? That's the problem? Meaning there's going to be so much demand for this car and their problem is going to be supply?
No. I think the problem is demand and competition.
High five there to Andrew for asking the question. Can't wait to watch Gordon dig himself out of this one. Pro tip. I have a funny feeling he's about to deflect one of his common tactics.
No. I think the problem is demand and competition. I think Tesla's deliveries...
Well, listen, but hold on. You just said... Just hear me out for a second, Gordon. Sure. You just said a moment ago, you said everybody else is sucking up the battery supply. They won't be able to have enough batteries. And so if they don't have enough batteries, that's a supply problem. That's not a demand problem.
Right. No. What I meant by that is they're not. Right. No. What I meant by that is they're not going to be able to expand their capacity. Listen, the reality is.
Notice the immediate deflection after Gordon fumbles the football there. Barely acknowledges the point that's been made and then immediately just throws out another one of his bare points that then needs to be discussed. Cheap tactic.
They are roughly 70% utilized if you look at their 2Q shipments versus what they said their capacity is. So they're not even selling out their current capacity, despite the fact that they're ramping a 500,000 car per year facility in Germany and a multi-100,000 car facility in the U.S. There's not enough demand for their existing capacity.
Wow, I think this point takes the cake for the most moronic thing I've ever heard Gordon Johnson say about Tesla or Tesla stock. And I mean, geez, there's been some doozies, so that is saying a lot. Maybe this is a good time to explain to Gordon Johnson that the production capacity is a theoretical maximum. It's a number to use as a benchmark to understand that if there was no downtime whatsoever for upgrades, new product ramps, repairs, maintenance, etc. If none of that happened, the car plant was just producing vehicles non-stop at maximum capacity without any of the actual things that occur in real life, such as downtime, this is the number that they would produce. Such a patently absurd argument. I mean, just use first principles. You don't even need to think about what Gordon said. Just ask yourself one question. Has Tesla sold every vehicle they've ever produced throughout the lifetime of the company despite scaling and increasing production throughout the company's history? And the answer is yes. Does that indicate there's a demand problem? No. Now, the third thing to consider is, would Tesla really be building new production capacity around the world? You've got Berlin coming online, you've got Austin coming online, Shanghai expanding, etc. Would they really be building out this capacity if there wasn't demand and they were failing to sell all the vehicles they were currently producing per his production capacity argument? I mean, come on, dude. Nobody's falling for this.
So the issue is not supply. They're not demand constrained or supply constrained. It's a demand problem, and it's competition next year that's really going to hurt them. The ID3, VW's ID3, which just launched in Netherlands, Norway, Spain last month, as of yesterday, has outsold the Model 3 in its first month. That's a big problem for Tesla. ID4 coming in the fourth quarter.
Question. Is it reasonable to expect that if a new product enters a new market for the very first time, people have known about this product for quite a while, they're anticipating it, they're waiting for it, and it finally enters this new market, is it reasonable to expect that possibly that first month, that first quarter of sales of this brand new product newly available in this market that previously was unavailable in this market versus, say, Tesla Model 3, which has been there for a couple of years, is it reasonable to expect that maybe in those first few months you'll see elevated sales for all that pent-up demand for those people who've been waiting for this product to finally become available in their market? Is that a reasonable assumption? I'll leave you guys to ponder that. As I've said in the past, guys, I can't let stuff like this slide. Now, this is my personal opinion, so I could totally be wrong, but the impression that I get from Gordon Genius Johnson regarding Tesla stock and his analysis about the company is that perhaps he's not motivated by facts and the truth, but perhaps there's an ulterior motivation there. Another reason perhaps that would encourage him to say things about Tesla, to spin things around and make them appear more negative than they are, or in fact make things that are highly positive appear negative, by playing tricks with people and debating in such a style that it's extremely difficult for people to make reasonable points and retort, because immediately he's just wedging something new there. Hey, look over there, pull some cherry-picked number out of my ass and let's move on to the next point. As I've said in the past, Gordon, I'm not going anywhere. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget your free stocks with WeBull and Stake using the links below. Deposit $100 in your WeBull account, you'll get a free stock valued up to $1,600, and Stake, spin the roulette wheel, you'll either get Nike, GoPro, or Dropbox. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.